Hi, this is Alan Gassman, and I am here with Brandon Ketron. And most of you have been on one or more of our PPP webinars. You can search them on YouTube. You can go to Forbes and search Forbes PPP Gassman. You'll see a lot of our work. We used to be estate planning and tax lawyers here in Clearwater, Florida, and we became PPP lawyers to try to help some clients and now to help a lot of friends. You have our email addresses here. If we don't answer your questions today or we have not answered your questions, feel free to send us an email, send the hard questions to Brandon and the easier questions to me. We do most of our webinars and most of our writing with CPA Kevin Cameron. He is a brilliant certified public accountant. He understands these rules very well, and he is the one who created an amazing spreadsheet that explains how the rules work and helps you stay in order with the rules. And here you see some YouTube sites you can go to watch the information about the spreadsheet, or if you want to buy the spreadsheet on approval, it's available from Lineberg Information Services. We're really proud of it. It's a really nice device. One more commercial, we have some free webinars coming up. We hope you'll join us for one or more of these. Anytime you want information about our webinars or otherwise, just let us know. Brandon, I'm going to let you open up this discussion. We have 29 minutes to talk about the really good news that we can pay our expenses for whatever many weeks it takes, up to 24, and then file our application, right or wrong.
Yeah, and that was the big news that came out on the new interim final rules that were issued on June 22nd. Everyone was wondering, if I don't use the 8 weeks, but I can spend all my funds in, let's say, 10, 11, 12 weeks, can I apply for forgiveness then, or do I have to wait for the full 24-week period to end? And luckily, the SBA threw us a bone here, and we can now apply for forgiveness as soon as we spend all of our loan proceeds. Now, what that doesn't allow you to do is if you spend, 90% of your loan proceeds and you're just done with the program and you want to go ahead and apply for forgiveness with what you spent so far, you can't apply then. You have to spend all of your loan amount before you can apply. But if that happens on week 15, week 16, it doesn't matter. You can go ahead and submit that application. The other thing that the rules did, and we'll go through these in more detail, number 2 there, is they did confirm that the owner compensation limitations, that owner compensation will be limited to $15,385 if the 8-week period is chosen, or $20,833 if the 24-week is chosen, does apply to S corporation and C corporation shareholders. They explicitly mentioned those types of shareholders in the new interim final rules, so the limitations do apply. And then finally, number 3 was a nice new rule. They said if you are subject to state closings, you do fall in that exception for having to have your full-time equivalent employees equal the same number as they were pre-virus. It was a little bit confusing as to whether or not that applied, because they just mentioned that if you were unable to operate due to restrictions imposed by CDC, OSHA, or HHS, then you could apply for an exception to that rule to avoid a reduction in your loan forgiveness. They didn't mention anything about state closings or government orders, but now they have clarified that since those are likely based upon the CDC guidelines, that you can go ahead and use that as an exemption as well.
Okay, so let me just start over again for those who are not lawyers or CPAs or intimately familiar with these rules. The SBA permitted banks to loan money under the PPP program based upon 2.5 months average 2019 net income for independent contractors, or for S corporations and C corporations, it was 2.5 months average payroll for a previous 12-month period. And it included for S corporations and C corporations money paid for not only wages, but also for group health insurance and pension plans. So you had a pretty big loan if you had health insurance and pension plans, and then you had to spend that amount within the 8-week period beginning the day after you got your loan on those items, which were referred to as the payroll items, which were payroll, state payroll taxes, group health insurance, and pension. And we were all rushing around trying to figure out how we were going to spend enough in the 8 weeks. You can also spend it on interest expense, rent, and utilities based upon certain rules. But initially, you had to spend at least on a 75%, 25% ratio, so that what you were able to get forgiven for rent, interest, and utilities could not be more than 1/3 of what you had for your legitimate expenditures for payroll. We lived in that regime for quite some time, a number of months, explaining why I have so much less hair and so much more gray hair. Thank you, Marcia, for cutting my hair. I'm social distancing from our hairstylist. So then we got some nice news here in the big picture. And the nice news was, look, if you got your loan before June 5th and you can't spend it all to get all your forgiveness in the 8 weeks after you got your loan, you can elect to go for 24 weeks. So everybody sighed a big sigh of relief. Everyone said, I wish I had known this earlier, or I wouldn't have spent money the way I did. I would have spent it more efficiently in my business. But now I know. Thank you very much. But wait a minute. What about these rules that say that I have to reduce my forgiveness if I don't keep as many hourly workers or as many equivalent hours on my payroll for the period? In other words, even if you spent all the money in the 8 weeks, if you had only 80% of your normal workforce for the 8 weeks, then you would have only gotten 80% of your normal forgiveness across the board on all these items. So everyone was considering keeping more people on the payroll than they needed to get the full forgiveness for the 8 weeks. Now you sigh your breath of relief and say, thank heaven, now I have 24 weeks, but wait a minute, do I have to keep that many equivalent worker hours on the payroll for the whole 24 weeks to get my forgiveness? If so, I'm going to be in big trouble because I'm a bar or a restaurant or a theater or another business that was shut down or curtailed as the result of COVID-19. So the same interim rule that gave us the 24-week rule also said, and by the way, if you lost a worker, not due to your fault, the worker just left, or you laid the worker off, or you furloughed them, and you offered them the job back and they won't take it, and you document that you offered it in writing, you document that they won't take it, then we will pretend that they were still on your payroll for purposes of the percentage, the number of hours requirement. Not what you would have spent on them, but you won't be penalized. And then they went even farther and said, if you ratcheted down your workforce and now you don't ratchet it up because you can't find qualified people, which is very much the case for a lot of us because people make more on unemployment than they do actually working right now in many situations. Or if you had to reduce your business because of CDC, OSHA, or other federal guidelines, then you're fine. But they didn't mention the state guidelines. So now what they've done on June 22nd, more gifts for us, is they said, you don't have to go the 24 weeks. If you get it done in 9 weeks, 10 weeks, 12 weeks, 14 weeks, whatever you get it done with, you cut the period of time right there. And we think that what they are saying, we don't know for sure, but we think they're saying is as long as you keep the workforce up to that period of time to where you spent your last forgiven dollar, then you should be fine. Although, if you give an employee a pay cut, of more than 75% of their per day or per hour rate after that 12 or 14 week period, there may be an issue. We're not sure, but most clients have not reduced compensation by more than 25% unless it's a commissioned type of employee. The other thing that happened on June 22nd was we got less vague language, but still vague language, which appears to greatly curtail what S corporation and C corporation borrowers can include in their forgiveness amounts as to what they spend for shareholders who work in the business. Whether that shareholder owns 100% or 100%, you're not going to be able to count their salary of more than $20,833 if they made $100,000 or more, or 20.833% of what, Brandon?
It's of their 2019 compensation amount. So it's the salary that you pay yourself. If you're an S corporation or a C corporation shareholder, if that was less than $100,000, you're going to be limited to 20.833% of that amount that you paid yourself in 2019. So there's a lot of confusion too. Some businesses weren't in business in 2019, and they got their loan based upon the first 2 months of 2020. So now the question is, how do they apply their forgiveness amount if they had no compensation in 2019? That hasn't been addressed yet. It solely says you use this 2019 amount. We think they would likely address it and say if you base your loan upon those first 2 months in 2020, that you can use that 2020 compensation and prorate it to some limitation, so you have the same forgiveness that you got for your loan amount. But we're not sure if that's going to be the rule. We're not sure how they're going to address that. So that's still an outstanding question, which is another thing that they do need to provide some additional guidance on.
Now, if you're not a shareholder, then the compensation that can be counted during the 24-week period is just over $46,000 per employee that could be paid during that 24-week period to qualify it. So, Brandon, let me ask you. Let's say that I'm 8 weeks into my forgiveness. I don't really have enough. I don't have any employees because everyone quit. They don't like me. And what if I give my business to my wife and my daughter, because I've always promised them that I would give the business to them, and I continue working for the rest of the 24 weeks? Now, can I pay myself a total of $46,000 for the 24 weeks, or is it going to be prorated? Is this a way around the rule?
It's a possibility. We're not sure when the owner, limitation does apply. It's likely, though, I'm kind of thinking if you were an owner anytime during that covered period, that you might be subject to the limitations. I think that's the conservative route, to take. You could certainly bring on your spouse or your daughter to work in the business and then pay them up to the $46,000 because they're not owners. But as far as transferring ownership, that hasn't been addressed. We're not sure how it applies. So I'd be hesitant to tell someone to do that, although it might be a way around it, as you mentioned.
So, Brandon, also, and by the way, for those of you trying to keep up with all this, I know we're going fast and there's a lot here. We're going to repeat all of this at least once before we're done in the next 16 minutes, also known as 4/10 of a billable hour in our profession. But Brandon, what can I count in my expenditures for retirement plan contributions and health insurance for my employees and also for me as a shareholder employee?
Yeah, so for employees, I think we have a pretty clear answer that you get the compensation limit, the cash salary that you pay them up to $46,000. I think it's $154 if you use the 24-week period. If you use the 8-week period, it's $15,385 that you get to count. In addition to those amounts, what you pay for your health insurance and retirement plan contributions on behalf of those employees can count on top of that cap. So you can get more than the amount that's limited on the cap, the cash compensation. Now, for your owners, the same caps would apply on the cash compensation, the 15,385 for the 8 weeks. But for the 24 weeks, it's only 20,833 max, because that's 100,000. If you're less than 100,000 in 2019, it's going to be a little lower than that. It's 20.833% of whatever that amount was. What's unclear, though, is that cap all that you can count, plus additional amounts for health insurance and retirement plan contributions. And that's been addressed a little bit, but not in a clear way. For S corporation shareholders, they could get their loan amount based upon that cap plus health plus retirement. But now for forgiveness, they don't get to count their health insurance in addition to that cap, because of the way it's reported on their W-2 is that the cash compensation includes amounts paid for health insurance for a more than 2% shareholder in an S corporation. So those S corporation shareholders are going to be limited to their cash plus their health insurance at that $20,833 cap. We think you can count retirement plan contributions on top of that, although there's some guidelines, and the AICPA actually said yesterday that it might just be the 20,833 cap for all payroll costs. That would include your salary, your health insurance, and your retirement plan. We don't agree with that. There's a frequently asked questions that specifically says that cap's only applying to the cash compensation, although the SBA could change the rules on us and not view it the same way that we do. So I'll say that again, because I know I skipped around a little bit there, but I'll start with the S corporation shareholder. They're going to be subject to the 20,833 cap, or 20.833% of their 2019 compensation if it was less than $100,000. Their health insurance is also part of that cap. So you get cash plus health subject to the cap, and then you can count retirement plan contributions on behalf of those owners in addition to those amounts. For the C corporation shareholder, you have the same cap on cash compensation, but health insurance and retirement plans can be added on top of the cash compensation cap. So you could get above and beyond that 20,833 amount. There is in the EZ application another confusing point here, a line item that says retirement plan contributions are limited to 2.5 months of the 2019 contribution amount. That's not in any of the guidance. That's not in the main loan forgiveness application. So we're unclear if that limitation is meant to apply throughout the entire loan forgiveness program, or if it just applies for the EZ application, or if it was left in by mistake and it doesn't apply at all. I'm sure we'll get clarity on that here soon, and some frequently asked questions or some additional SBA guidance, but that is a one unanswered question as of right now. So if you're close and you're worried about it, you should be considering that cap and whether or not it can apply when you're running your numbers and seeing if you're going to, go ahead and apply for the forgiveness, or if you need to wait a little bit longer period and have maybe another payroll run to get towards full forgiveness.
So here's another question we get a lot of. I just finished my 9th week. I got it done. I'm so happy. Where do I apply? How do I apply? Can I really apply now?
Yeah, and as of right now, I guess the answer to that question is no, because the banks aren't accepting applications. They even if you want to use the 8 weeks, the banks have indicated that there were some that told us July 1st they were going to be up and running on the AICPA webcast yesterday. Some had said July 15th or the middle of July before they're going to be accepting applications. And a lot of this is they don't know how these rules are going to work either. They're still waiting on guidance on some issues to have clarity to make sure applications are correct. And the application was just recently revised, and it may have another round of revisions since there's some differences between the two applications based on how things apply. So we'll see when the banks are again accepting applications, and then we can go ahead and start applying.
But if you finished your 9th week and you're done and you're clean, then your application, which you would file maybe July 1st, maybe July 15th, will date back to that day that you had that forgiveness. And we don't think you'll have to keep your payroll up after that date, or at least after the date that you file with the bank. A lot of people are very angry with the banks because the banks don't have answers. There's a good reason that the banks don't have answers. It's because the interim final rules don't have answers. If you are interested in some light reading or heavy reading or reading that would put you to sleep, read the interim rules, read the applications, read the forms, and realize that they could have done a better job on it, to say the least. Off camera, we feel that the people at the SBA who have written these rules really have not thought through what these rules mean and the effect that they're having. And it's been a continuous pattern since the very beginning. When they say an owner employee, well, what is an owner employee? Do you mean just independent contractors who own their own business? Because an owner of an S corp doesn't own the corporate, doesn't own the business. So how are we supposed to know what you mean? And what about an owner's employee? What about someone who owns 20%? Do they need to own 20%? Because one regulation says that if you're a felon with more than 20%, then the company can't apply. But then another regulation talks about 2% shareholders. And they do this because of the tax treatment of a 2% S shareholder. Well, what about a 1% S shareholder? They don't have the same tax treatment. Do they have to follow the same rules? And apparently so. So if you were angry when you were 8 years old and your parents gave you rules that never seemed to make any sense, join the club. We're back here. So Brandon, do we want to go ahead and just spend the next 9 or 10 minutes going through these slides that we have here, or are there any questions and answers that you think we should mention at this point?
Yeah, I think just going through these comments just in a little more detail, just to cover how some of these rules are going to work if you do elect to apply earlier than the end of your 24-week period. And what we do have clarity on is that is allowed. You can do that. It's just, you notice the language from the interim final rules is here. It specifically says, including before the end of the covered period, if you used all the loan proceeds, you can go ahead and request forgiveness. So the question is, I have a reduction of my salary by more than 25% that could apply. Do I only count that reduction for the 10 weeks that I've had my loan outstanding, or do I have to apply it for the full 24 weeks? And they specifically do address that reduction in salary. Have a reduction in that salary and you request forgiveness early, that you have to take that into account throughout the entire 24-week period. So if you had someone that had $100,000, well, let's use $50,000 of salary, and you reduce them down to $25,000, that's going to be a more than 25% reduction. So to the extent that it exceeds 25%, you have to multiply that dollar amount by the entire 24-week period, which reduces your loan amount. So that does apply. Now, the second question as a part of that is, if I had my headcount at a full level when I applied for the loan, do I have to keep that same level for the entire 24-week period? Do I have to go back and recertify at the end of the 24-week period that I did keep my headcount at full levels to avoid a reduction? Or is it really just the date my application was filed that's relevant? Our interpretation of this is that it's the date that you file your application that's the relevant determination. If you have a reduction after that date, I don't think it matters, because if it did, the SBA wouldn't allow us to file early. That's our thinking on that. That certainly could change from SBA guidance, but as of right now, that is the way we're viewing it. So if you apply for forgiveness and had no reduction in salary, no reduction of your headcount on the date you file, and you spend all your loan money, then I think you're home free, and you don't have to later go back and take into account subsequent reductions in headcount or your salary. But we'll wait and see how the SBA confirms that before telling you that is the rule for sure. The other thing here, again, we did mention all these caps on owner employees. We have the language specifically from the interim final rules. And as you can see, they do address each particular owner. The C corporation owner employee is capped at their 2019 employee compensation, the pro rata amount of that, plus retirement and health insurance contributions. S corporations are capped by their cash compensation and only mention retirement plan contributions because their health insurance cannot be separately accounted for because they're included in that cash compensation amount that's reported on their W-2. Schedule C and F filers, again, capped on their owner compensation based upon that 2019 net profit amount. Set Schedule C and F filers are your sole proprietors and generally independent contractors. You don't have to actually pay yourself this amount. You just get a credit for it on your forgiveness amount to apply. It's not that you have to make a draw from the company. It's not that you have to now write a check to yourself from the business. It's just an automatic credit for those individuals. And then they mentioned general partners. You're capped at your 2019 net earnings from self-employment multiplied by this 0.9235% amount. This amount comes from the Schedule SE, and it essentially is backing out the employer's share of payroll taxes to make this more like a wage, which other owners don't get credit for either. So that's just matching it up and making sure that we're appropriately accounting across all businesses.
Now, let me mention that the vast majority of the clients that we consulted with got to the full forgiveness within the 8 weeks by making robust pension and profit sharing plan contributions that we believe would give the forgiveness as paid, even if paid now for 2019 or for 2020, at least for the non-owner physicians. And the applications are very clear, and the regulations are fairly clear, that you can prepay rent to a related party. So if you're in your eighth week and you want to prepay 3 or 4 months rent to your separate landlord, even if you are the landlord separately in a separate company or entity, you can do that. You cannot prepay the interest. You could also prepay compensation. If you say, Janet, I pay you $10,000 a month, you're not at the $46,000 because you took a month off. Here's an extra $20,000 to cover the next 2 months after the 8 weeks. You have to work it. It's advance payment to you. Will you accept it? Of course you'll accept it. And then that may put you over for the 8 weeks, so you don't even have to worry about the 24 weeks. But then, Brandon, the other question is, if I get aggressive for the 8 weeks and I file my application based on 8 weeks and they come and audit me and they don't agree with what Gassman and Ketron said they could do, then can I just automatically flip to the 24 weeks and then I'll have it made in the shade, as we say in Florida?
Yeah, I mean, we don't know that for certain. We think that would seem to be allowed, that if you don't meet it in the 8 weeks because of the rules changed or you misinterpreted something, that you could just now submit your application based on the 24 weeks. It seems to be a reasonable interpretation of the current standing of the law. We don't know that for sure. That hasn't been confirmed anywhere, but we think that could probably be allowed.
Okay, we've got about 2 minutes left. So what should we cover in the remaining 2 minutes?
Yeah, one thing here to address is they do mention now some documentation requirements that you have to document if you're relying upon one of the de minimis exceptions to maintaining that full-time equivalent headcount. They specifically state about the inability to rehire individuals, that you have to maintain documentation about the written offer to rehire certain individuals, the written record of the offer's rejection, and then the written record of efforts to hire similarly qualified individuals. I'm not sure how you document and write down efforts, but I guess maybe your ads that you are posted, responses to those responses to interviews, you can keep track of and say, none of these individuals were qualified, and maybe just write down reasons why they weren't qualified. I think that would be sufficient for those purposes. And then for those that are relying upon the inability to get back to a full level of operation due to guidelines stemming from CDC or OSHA or HHS or state and local authorities limiting, the ability of your business to operate, you actually have to submit that documentation and include with your forgiveness application copies of the applicable guidelines that were relevant to your business. So if you're a restaurant, you have to go to the CDC website, find where they mention restaurants and say, okay, here are all the restrictions that apply to my restaurant, and here's why I wasn't able to operate at the same level I was pre-virus. So they are now giving us guidance on how we're having to document for these exceptions, and it's not going to be as easy as just checking a box. You're going to have to do some research and do some homework as to why they don't apply, and make statements on the application and attach them to the application as to why those impact your business. All right, Alan, I'll kick it back over to you if you want to close us out with any last thoughts. I think you're on mute, Alan.
Sorry about that. What if my business was not required to close, but my customers were required to close, and therefore I had no revenue? Is that excused?
Yeah, and I think it might be because they do here mention that the statutory exemption includes both direct and indirect compliance with the COVID guidelines. So that could be considered maybe an indirect effect to your business, that your customers weren't allowed to come to your business and therefore you had no revenue. And you can't have employees and keep employees on the payroll if you have no revenue. So maybe indirectly you are impacted by the guidelines, I think is the way you would go about approaching that issue.
Okay, so in the words of one of my favorite authors, Douglas Adams, don't panic and never forget your towel. It's really important to keep your ear to the ground as to what the changes are. Brandon and Kevin Cameron and I are going to continue to write articles and provide webinars whenever there are updates. And we're a little bit shaky about it now because the SBA website has been down, which means that they're probably about to plant a bunch of new updates, which they typically do on Friday before they go home. I also promised Kevin that I would have Kevin the Wonder Horse here with us to say hello from Kevin, who's enjoying a nice vacation on Anna Maria Island. If you see Kevin on Anna Maria Island, you can ask him any questions you like about the PPP program. You do have our email addresses here. We have appreciated the opportunity to share this with you. We do welcome your emails with questions, comments, and suggestions. We are answering hundreds and hundreds of these emails, so please forgive us if we didn't get to yours. It didn't mean that it wasn't a good one, but most likely we will get back with you. Have a fantastic day and a wonderful weekend. Hug someone you love, and thanks again.